What's coming next in this market won't be decided by price. It's already being decided somewhere else. And that's the part that should get your attention today, because if you're just watching the board, corn looks quiet, beans look steady, cattle look strong, oil's moving higher, nothing feels urgent. But the drivers underneath this market right now are shifting fast. We've got input costs starting to tighten again. We've got protein demand moving in a direction most people are not accounting for yet. And we've got weather setting up in a way that could split outcomes depending on where you sit. And here's the problem. Those things don't show up all at once. They show up late. So today isn't about what the market did. It's about what's starting to build behind it. This is Boots and Bushels, your daily look at the markets that feed America. And today we're not just running through prices. We're talking about what's shifting underneath those prices, what's starting to tighten, and what could move your margins next. Because right now this market isn't loud, but it is changing. Let's start with what actually moved today. Not the noise, not the headlines, what changed that matters. There are three areas you need to be watching right now: inputs, demand, and weather direction. None of these are fully priced in yet, and that's where the risk sits. Start with inputs. Fertilizer prices are moving higher again, not aggressively, not enough to dominate headlines yet, but tightening. And the driver isn't local, it's global. Even with easing tensions on the surface, supply chains tied to the Strait of Hormuz are still disrupted enough that fertilizer movement isn't back to normal. And when fertilizer starts to move higher quietly, it rarely stays quiet. It starts to work its way into decisions. It changes how aggressive producers get. It changes where risk is taken and where it is avoided. And it starts shaping expectations before the market fully reacts. Right now, we're in that early stage, not panicked but not comfortable either. And the pressure point here isn't just price, it's timing. If this carries into planting and early growth, you're going to start hearing more conversations about cutting back, managing inputs tighter, and adjusting risks. And when those conversations start showing up broadly, that's when markets begin to move. Now shift to demand. This is the one most people are missing. Egg prices have collapsed. Bird flu cases are down sharply. Supply is stabilizing and prices have dropped from roughly $5.90 down to about $2.50 per dozen. That's a massive move. And it's easy to look at that and think it's just a consumer story. It's not. It's a protein shift. When one protein gets that much cheaper that fast, consumers adjust, retail adjusts, and that shift doesn't stay contained. It bleeds into beef, it bleeds into pork, and it changes behavior at the margin. Now that doesn't mean cattle demand falls apart overnight, but it creates pressure. The markets don't need a full shift to move, they just need enough change to tilt expectations. That tilt is starting. So while cattle look strong on the board, the real question is whether that strength is fully accounting for where the demand is heading, or if it's still reacting to where we've been. Because those are two very different markets. Now let's talk weather. This is where things start to separate. Right now we've got a split setup. Drought conditions are easing in parts of eastern corn belt. That's supportive, that's stabilizing. But southern plains and parts of the high plains are still dealing with dryness. And that matters because we're not heading into this growing season evenly. We're heading into it with different starting points depending on location, and uneven conditions create uneven expectations. Some areas will look strong early, some areas will struggle, and early in the season, the market has a hard time pricing that correctly. So what you get is hesitation. And when the market finally reacts, it tends to be sharper because it wasn't fully priced in ahead of time. Now layer in what's happening globally. Brazil is dealing with major flooding, and this is more than a crop issue. This is a livestock issue. There are real losses, real disruptions, and real stress on production. And when a major global producer faces that kind of disruption, it doesn't stay contained. It affects supply, it affects trade, it affects expectations, and eventually it shows up in price. The question is always timing, but the direction is clear. Disruption tightens things, and tightness creates opportunity, but also volatility. And real quick, if you want to stay ahead of moves like this, not just the prices, but what's driving them, make sure you're subscribed. I do this every day, markets, weather, and news that actually impacts producers, Monday through Friday. Now, when you step back and look at all this together, this is not a calm setup. You got input pressure building, demand shifting, weather splitting outcomes, and global disruption in livestock production. That's not stable. That's a setup where something breaks one direction or the other. And the question is which one hits first. Because coming up next is where this gets even more important. We're going to talk about what the market is actually pricing right now, and more importantly, what it's still ignoring. And that's where the real risk is, and opportunity sits. Let's get into grains. Right now, grains are not reacting aggressively, they're hesitating. Corn is drifting, beans are holding. And when you see that kind of behavior, it usually means the market is still deciding which pressure matters most. Because right now you've got competing forces. Improving moisture in parts of the corn belt should be bearish, but rising input costs and uneven conditions should be supportive. So the market waits. And waiting markets can turn quickly once the direction becomes clear. Corn is trading near $4.44 at the time of this recording today. And what stands out is that it's not pushing lower despite improving conditions in some areas. That tells you the market isn't fully confident in a clean, high production setup. It's watching inputs, it's watching weather, and it's waiting. Soybeans are trading near $11.64. Beans are steady, but they're quietly tied to input decisions. If fertilizer pressure continues, beans start to look more attractive in certain situations. That doesn't show up immediately, but it starts shaping thinking. And when thinking shifts, markets follow. So while beans look calm, they're sitting right in the middle of that decision-making process. Now on wheat, we didn't have a clean Chicago wheat futures price at the time of recording, so we'll leave wheat out of today's recap. Now let's move into livestock. Live cattle are trading near $247.52. That's strength. There's no denying that, but strength doesn't mean safe. Because now you bring back that protein shift. Cheaper eggs, shifting demand, that creates pressure over time. So the question isn't whether cattle are strong today. They are. The question is whether that strength is accounting for what's changing underneath demand. And right now, that's still developing. Feeder cattle are trading near $370.77. Feeders are following strength, but they're also directly tied to feed cost and margin pressure. If corn moves, feeders feel it. If risk tightens, feeders feel it first. And that's where things can change quickly. Lean hogs are trading near 104.17. Quieter market, but still tied to demand shifts. Not leading, but definitely connected. And now crude oil. It's trading near 97.98 and pushing higher. This is one of those markets that moves before everything else reacts. Even with tensions easing, supply chains are not fully back to normal. And when oil moves higher, it works its way through the system. Not all at once, but over time. So again, this is about timing. Oil is moving first, the rest follows. So step back and look at the full picture. Inputs tightening, demand shifting, weather splitting outcomes, global disruptions building, energy moving higher. That's not a simple market, that's a layered market. And layered markets don't move cleanly, they move in stages. Right now we're in the early stage, where things are building but not fully priced. And that's where awareness matters most, because once it's obvious, the move has already started. Let's wrap it up with a quick look at where markets were at the time of recording. Corn is trading near 444, slightly lower on the day. Soybeans trading near 1164, holding steady. Live cattle are trading near 247.52, continuing to show strength. Feeder cattle are trading near $370.77, moving higher. Lean hogs trading near 104.17, slightly lower. Crude oil trading near 97.98, pushing higher. And as we move forward, the focus isn't going to be what already moved. It's going to be what continues to build. Watch inputs, watch demand, watch weather. Because those three things right now are setting direction before price fully reflects it. If you want daily updates on the markets of Feed America, subscribe to Boots and Bushels, and I'll see you tomorrow.